What HO-6 coverage fills HOA master policy deductible gaps? Imagine you're living in a condo and a fire damages your unit. The Condo Association's master insurance policy covers the building, but there's a big deductible to pay. Who's responsible for that? That's where your condo insurance, known as HO-6, comes into play. Many condo owners don't realize that their standard policy might not cover large assessments from the Homeowners Association. The key coverage that helps fill these gaps is called loss assessment coverage. This part of your HO-6 policy can be increased to cover more than the usual small amount, sometimes up to $25,000 or more. It helps pay the portion of the HOA's deductible that you might be asked to cover if a claim occurs. Sometimes, you can add a deductible assessment endorsement to your policy. This endorsement is designed specifically to cover your share of the master policy deductible, which can be quite high, sometimes reaching $50,000 or more. Most HO-6 policies also include some basic loss assessment coverage, often around $1,000. But that amount isn't enough if the HOA's deductible is large. By increasing your loss assessment limit, you can avoid paying out of pocket for big assessments. For example, if your HOA has a $10,000 deductible after a major storm, and your policy only covers $1,000, you'll need to pay the remaining $9,000 yourself. But if your HO-6 policy has a $25,000 loss assessment coverage, it can cover the entire deductible amount. Another important part of condo insurance is dwelling coverage, also called Coverage A. This insures the interior of your unit, including improvements and upgrades. If a fire damages your kitchen and the repair costs are below the HOA's deductible, your HO-6 policy can help pay for those repairs. This way, you protect your personal property and improvements without risking large expenses. In practical terms, if a water leak causes damage and the HOA's master policy has a high deductible, your HO-6 policy with enhanced loss assessment coverage can step in. It will pay the assessment the HOA charges you to cover their deductible. Without this coverage, you might face a big bill that could be hard to handle. So, to fill the gaps left by the HOA master policy, condo owners should check that their HO-6 policy includes enough loss assessment coverage and a deductible assessment endorsement. Also, having good dwelling coverage for your unit's interior helps protect your personal investments. This way, you stay protected from unexpected large costs that come from common property damage or assessments.